Nice. We just reached the end of the timer, so it's time to begin. Everybody, welcome to the session. My name is Jose Blasco. I will be your guide today. I will be your instructor, your trainer, your coach, you name it. We're going to be looking at the markets today. We're going to be looking more specifically at the stock market. And the session today, it's about swing trading. Okay, so swing trading, of course, it could be defined in different ways. But basically, we're going to be looking at market opportunities of, let's call it an intermediate duration, maybe a few days, maybe a little over a week, maybe 2 weeks, something like that, okay? Later in the week, we'll have other sessions as well with stocks where longer term opportunities would be identified as well as intraday opportunities too. But today, we're going to be working in the area of intraday, swing trading. Let me say that again, swing trading, okay? Again, my name is Jose Blasco. It's a tremendous privilege and pleasure to be leading the session today. This is an important week, as you all know, for FX Trade, in the sense that we are launching our FX Trade education line. We were eager to put together something powerful for students, and especially now, apart from eager, it's a very special in the sense of sensitive moment for students of Online Trading Academy that need more support than ever. And the FX Trade is doing an amazing effort to grant access to FX Trade education for free during 3 months for OT students. So I'm really feeling special being part of this project, because I know it's going to be producing a lot of good for a lot of people that need it, okay? So my name, Jose Blasco, my email, jose@fxtrade.com. And you can see as well, under my name, we got a special email, educationsupport@fxtrade.com, which is going to be your support resource. Anytime during the class, you can certainly interact with the chat box, etc., etc. So we can give you answers real time. But if you were to watch this recorded, which I'm sure many will do, and you need support, so use that email address, educationsupport@fxtrade.com. Okay. And I would say the session is more or less introduced. I only have one thing to do, which is to read the disclaimer for you, like all financial presentations. So I will do that, and we will jump on the charts. Disclaimer: Forex Trade SLU provides generic information to its subscribers, and it is strongly advised that the client should consult with a financial advisor before proceeding to trade. While all information posted is believed to come from reliable sources, the company does not guarantee the accuracy, correctness, or completeness of information available from its service, and therefore will not be liable for any loss incurred. FX Trade does not provide investment advice, nor provide any personalized investment recommendations and or advice in making decision to trade. No guarantee is made that any user of the service will or is likely to achieve results advised by the webinar examples. There is often a large difference between theoretical performance and the actual results later reached by any trading platform. There are many influencing factors related to either the market in general or the specific implementation of any information which can affect actual trading buy and sell results. Before you start trading, please make sure you have considered your entire financial situation, including financial commitments, and you understand that trading is highly speculative and that you could sustain significant losses. Okay, so beyond the legal text, just to keep it very simple, guys, let's be serious in the session. We'll certainly be looking at the market and market opportunities, but obviously when it's time to execute those, we are all different. We all have different account sizes and so on. So everybody, I am counting on you all to have a risk management plan, a trading plan, and whatever opportunities that we identify in the marketplace, you tune them or adapt them to your mentality, psychology, trading account, trading rules. So you adapt your trades, you adapt the trades to you, basically. Okay, cool. And feel free to ask questions if you need to be helped on developing certain rules that you may not have, because during the sessions that we're going to do, we will also be running multiple times a week. We'll be running lecture sessions where it's okay for us not to trade at that time, and maybe we can talk about trade. We can talk about risk management, for example. So we can do many of those things to help you develop rules if you are lacking rules in your trading. Okay. Good. So what do we have in front of us? Well, we have a trading platform, and as you can see, the symbol that we have loaded here in the background is the S&P 500. What else do we have in the platform? Well, we have a series of colored trading zones, red and green, as well as we have a colored indication here of what we call the market climate. And I need to explain all of this. Apart from that, I also have a tool here on the upper left, which is a scanner that is running automated processes looking for market opportunities, okay? And you know what, just to have a fresh scanner, I'm just gonna click run, okay, on that scanner and run on that scanner. So I picked two of the scanners and I'm running them. And let me show you why those two, okay? So the two I picked, okay, if you look at it carefully, are directional long with the up arrow and directional short with the down arrow. So what does that mean? It means that the scanner that I'm running as we speak, you can see that little by little the percentage will complete, go all the way to 100%. So those scanners are looking for stocks to be bought in the market to go long and, you know, as a trader to be exposed directionally to the upside. And also the scanner is looking at directional short opportunities, which means that as a trader, we're going to be exposed to directional opportunities with stocks. Now, of course, the stock market, okay, the stock market got, let's call it 9,000 stocks total. It's not exactly 9,000, but more or less 9,000. So let's call it 9,000. And obviously, you could certainly go ahead and move one stock at a time, you know, through a watch list you may have, and manually do a manual research of opportunities, okay? My style of trading, and maybe it has to do with my background, which is engineering. You know, it's many years now that I don't work as an engineer, but that's my background. And therefore I welcome and I love technology. Okay, so instead of doing anything manual, the more I can automate on my screen, the more I'm gonna enjoy it. And not only I'm gonna enjoy it because it saves me time, I am gonna enjoy it because it's gonna make me objective, because computers do certain things better than humans. If I have to plan the trade looking at this chart, okay, and you look at what's happening in the market as we speak, right? I mean, we all know the market has been moving down, and this is no joke, okay? So what happens? Well, some traders may develop fear. Some traders may get excited. Some traders may get absolutely panicky. So many types of human emotions may appear, and therefore, the moment you start doing your analysis, you may end up adding subjectivity to the process. So in my case, I love to use technology with the scanners, as you can see on the left, to save me time. And then here on the bottom left and on the right, because now I'm going to have zones identified for me, trading zones, buy zones, sell zones, price ranges, where, you know, I'm going to be able to act on those to plan trades in a specific manner. So my plan in all the sessions where we'll spend time together, okay, my plan is that little by little, I get to give you more and more insight into the various steps I take to identify a market opportunity and execute it. Of course, the sessions that we're going to be running, as you know, are 1 hour long. So what happens? It's obviously not possible in 1 hour to explain everything we do as a trader to put a trade in place. So what I will be doing, and I need you to bear with me on that, okay? And the same happens with all the other coaches you'll be working with. What my suggestion would be is that just bear with me on that. I'm going to give you, let's say my approach is going to imply, I don't know, let's call it 8 steps. So today I'll talk about step 1 and then implement all the other steps. And as you watch me implement the whole method or the whole process, there may be things that are not fully explained and you may have questions. So please type them on the chat box. Know that the proper answers may come in future sessions, because today I will focus on step 1 and the next day I will focus on step 2 and so on. Okay, so bear with me on that as we spend time together. Some of you are working with me for the very first time, and therefore we'll need to spend a little bit of time together in the sessions so you get to a point where we speak the same language. In the end, no matter where you're coming from, it's going to be all trading zones. Okay, so obviously trading zones are very familiar to OTA students. Okay, but many other traders use them too. And many other people trade other techniques, okay, which have nothing to do with zones. But for example, let's say you are a Fibonacci trader and you draw a Fibonacci retracement like that, okay? So what will happen to you here? Well, you would probably conclude that these zones here are likely to be going to be very important because they may react to this fib or maybe that fib because they are kind of, in the same area, where that zone, for example, is kind of in the middle of nowhere because it's not coinciding with that fib. Just like this one as well, there is no trading zone, right? So if you were to be a Fibonacci trader, which I'm not saying I'm going to use fibs, okay? But if you were to be a Fibonacci trader, I'm using this as an example, probably most of your focus when it comes to trading would be in that price area around 315, okay? But anyway, I need to be way more concrete than that, which I will, okay? Just bear with me on that, okay? But my point is, no matter who are you as a trader, who you are as a trader, you use fibs, you use indicators, you use support and resistance, you use key price points like the up and the high, the low and the close of the prior month, the up and the high, the up and the close, the high and the low of the prior week. No matter what you do, okay, maybe you use, doing intraday, you use floor trader pivot points. Doesn't matter what you do. In the end, you would come up with some trading points, okay? Trading points. You can call it support, resistance, buy zones, sell zones, whatever. I will call it UFOs. Okay, so if you were with me, be ready for you to hear the term UFOs. Okay, and it's not only because my little UFOs there look like flying saucers, it's because UFOs stands for on-field orders. Okay, and that's the key. Okay, because all of this price action, okay, means that here orders got filled already. Okay, so orders got filled. That's why price moved. Okay, but the beauty of those price zones with a little flying saucers inside is that basically you still got on-field orders that haven't got filled yet. So what would happen is that let's pretend price goes up and up and up and gets to where the UFO is. Well, those on-field orders are about to get filled, and the moment they get filled, what's going to happen to this price? Fall, okay, or likely to fall. And notice that we have a percentage there. We need to talk about what that means. We'll talk about it. And when this comes to these price points, where now you got buy on-field orders, what's going to happen to the buy on-field orders? They will get filled. And the moment they get filled, what's likely to happen? This market is going to go up again. So what would you want to do as a trader? You would be happy to get long here in the bottom before the move happens. You would be happy to get short where the red UFOs are, so you catch the shorting opportunity as well, okay? So this is kind of like a crash course on UFOs, okay? And I need to get way deeper into this, okay, and explain many things. Notice that some UFOs got a darker color or a lighter color, so there is plenty of things in here. For now, forget about everything, just think about price zones, okay, which are relevant because this is where the market is likely to stop and turn until it reaches the rival price zone and then stop and turn again, okay? Now, I am discussing all of this with you guys with the S&P, okay? But today we are supposed to talk about stocks, right? So the scanner just completed, okay? The scanner just completed. So when it comes to short-term opportunities, it seems that the scanner has identified 3 stocks that meet a certain criteria that may be valid when it comes to shorting, okay? And I need to explain the criteria. And when it comes to going long, the scanner has picked up one market opportunity, one stock that could be a good candidate for us to go long. Okay, so look, let me click on that stock. Okay, so the stock loads, and then we'll talk about it. Okay, and I will give you more and more insight as we go. Okay, so we're just experimenting a little bit of PD. In this case, that means pending data. So that means that we need to wait just a little bit for the data to be downloaded. Okay, here we go. The data is now downloaded and we have a full chart. Okay, so we're going to have to talk about many things. Okay, many things. Notice immediately we have been given a collection of trading price zones, isn't it? So buy zones with the green color, sell zones with the red color. So all of this has been given to us, which it's nice from a time-saving point of view and also objectivity, because there is no emotions. It doesn't matter if you get excited because of the gap or you don't get excited because of the gap. The fact is that the zones are given to you, so no human distortion, no human emotions, okay? But today, since again is the first time that we are spending time talking about stocks, So instead of working on the right side of the chart, okay, I would like to begin working on the left side of the chart, which basically, if I maximize that chart, okay, so you see it better, you will be able to see that in the bottom part here, I got a tool, okay? The tools in TradeStation are called studies, okay? Not sure if I said it. I am using TradeStation, okay? You can see the name here on the upper left. This is a specific trading platform. By the way, you don't need to use TradeStation. What I'm about to explain could be any other platform. And by the way, if you want to be fully broker agnostic, you could actually use, you will see me use many times a platform called TradingView. Not sure if you guys are familiar with it. Probably you are, isn't it? Because it's quite common nowadays, okay? And it's very powerful, and you have all markets, stocks, forex, cryptocurrencies, futures, commodities, you name it. So it's pretty cool. Okay, so you may see me switch back and forth between TradingView and TradeStation, but today, again, since it's day one, I'll try to not to drive anyone crazy, and I'll stick to a platform. Okay, and what do I have here? Well, I got TradeStation. I have a daily time frame for that particular stock, and what I have on the bottom part is I have a study. As I said, TradeStation calls them studies, and that study is called AutoClimate. And basically, notice that AutoClimate keeps moving from red to blue, But what's super important, and I do need to zoom in, is that we are given some particular figures, okay, in here. And that's actually the key, much more than the colors. I mean, the colors are nice because, it's quite visual, and I think it makes our life easy, and all of this is welcome. But if I zoom in, now we are being given, specific figures, and those figures have a very important meaning. And actually, the figures we care about are the three figures on the right, okay? Those figures on the left, they are not relevant as we speak, okay? So those three figures are the ones I would like you to focus on, and let me explain what that means, because that would be my first step. Okay? That would be my first step. And, it doesn't matter how you trade, okay? It doesn't matter how you trade. It doesn't matter if you use multiple timeframes or not. It doesn't matter if you are using some sort of analysis of where price is within a curve, or you are looking at the trend, or you trade in the direction of the trend, or you trade counter trend. So it doesn't matter what you do in trading, okay? And please let me know if you agree with me on what I'm about to say. So in a minute, please give me some confirmation on the chat box. And by the way, it's okay for you to say I disagree. It's absolutely fine. But what I would like to say here is that no matter how you trade, no matter what you do, the first thing you should conclude is it time to trade, yes or no? I would say that's the first thing, because if you were to spend a lot of time looking at every single angle of a trading opportunity, and at the end, you spend like 10 minutes, 20 minutes, 12 minutes, 5 minutes, whatever it is. And then at the end, at the very end, that's when you conclude, okay, yeah, no time to trade. I would say that's a little bit of a wasted time. So I would prefer to conclude if it's time to trade or not at the very beginning. Would you guys agree with me that that would be a good idea? And also, in the other hand, think about this for a minute. What if you had an opportunity? Let me rephrase that. What if you had a methodology that never told you is no time to trade, right? So, which, by the way, that's the majority of methodologies that at least I have seen myself, okay? When you attend a course, read a book, most of the methodologies teach you a methodology to trade, but there is no rule to stop you from trading. And sometimes the market conditions are not suggesting you should be a trader. Okay? They are suggesting it's better to sit on your hands and not to trade at this moment in time, or at least a specific stock. Okay, at least a specific stock maybe is better to pass. Okay, so again, my approach will be in that first step to look at the market climate, which I need to explain what climate means. I think you kind of get my point, even if I don't explain it. Okay, it's kind of like the market environment, something like that. It's more than that. Okay, so I'll explain it well, little by little. But basically, let's say let's be a little simplistic today on day one. So it could be a sunny day, it could be a rainy day. Okay, so if it's sunny, you go long. If it's rainy, you go short. Okay. But what if it's a sandstorm? What if it's a blizzard? What should you do? Stay home, stay safe. Does that make sense? No time to trade, right? So first thing, look at the climate, and the intention when looking at the climate is first, okay? The very, very first intention is it time to trade, yes or no? Is there a blizzard out there, okay? Am I gonna get hurt? If that's the case, stay home. And then if it's not the case, then let's define if it's rainy or sunny, so I know the direction in which to trade. Okay, so that's going to be my first approach to whenever I look at a chart. And when I say my approach, I don't mean that's the only approach. I don't mean it's the best approach in the world. But this is the rationale I'm sharing with you guys, and hopefully it makes sense. And if it does, then you will enjoy the following steps. Okay. So anyway, again, how did I come up with ENPH? Well, I came up with a stock because of the scanning rules. So I would like to flash this for you guys, and feel free to take a screenshot if you wish. I'm just gonna zoom in. So if you take a screenshot, it's gonna be neat, okay? I'm just gonna leave it there just a few seconds so you have the time, and then I will explain it. Okay, so I guess that you probably had the time to take a screenshot, okay? So what are we doing? Oh, let me do this. So what are we doing? Well, first notice that we are scanning for the whole US market, but only stocks that are greater or equal than $15 a share. Okay, so stocks that are very low price point will not be part of the trading, okay? Why? Well, because probably a very low price point stock denotes lack of institutional interest. Okay, and if there is lack of institutional interest, you may have little amount of on-field orders, or maybe some fund manager buys some of that stock, but for you to buy, someone has to sell to you, and if no one is selling to you enough, so you cannot buy everything you want, so then the market is about to close, and what do you do as a fund manager? You may cancel the remaining orders. In other words, you may have on-field orders in the market, but they may get canceled, or they may not be there forever. And in other words, the probability or the quality of those trades may not be the best. Now, could it be that, like for example, let's talk about a drug stock, a drug company. Let's say a company that produces drugs, create a new drug that is going to fix a very big problem humanity has. For example, the coronavirus. And let's say that that pharmaceutical laboratory nowadays is a $2 stock, but tomorrow they will notify and make the public know that they just found a cure for the coronavirus, and it's going to be amazing. So what could happen to that stock? Well, overnight there is this massive attraction of institutional interest, and not only the stock rally in price, but the stock goes from $2 to $5, which is more than double. And even though it's still very low price point, there is a lot of institutional interest. Okay, so that could be a good stock. But again, what's the probability of this to happen? Well, it's not going to happen too often, isn't it? How many times companies fix the world or solve the humanity? So it's not going to happen too often. So again, scanning for lower price point stocks typically may put you in a position where you may trade stocks with less institutional interest. So I am drawing the line at $15 a share as my minimum. It doesn't mean you cannot go lower. It doesn't mean you cannot be pickier than me and go higher. Okay, so I'm just sharing the rationale here. What else? I am looking at volume as an average in the last 3 months. And I am drawing the line at 500,000 shares. So, if, again, it's all about institutional interest. If a stock has very little volume per day, or has a very big spike of volume one day because something happened in the news, but it's not consistent through time, well, probably it means that there is little institutional interest. And on top of that, probably also little liquidity. So you may get slippage when you trade. So in other words, I would discard that. Okay, so I'm having a filter there that is looking for institutional interest and liquidity. What else do I have? Sorry for that, guys. I just zoom out. What else do I have? Well, I also have a filter for options. Okay, and you may be like, options? Why options? We are trading stocks today. Yes, but what's the beauty of having options in the filter? Well, who trades options? Okay, well, normally the people trading options are typically people that are well trained on how to trade. Normally, the majority of people that listen to, I'm just going to say Mr. Jim Cramer on TV, for example, they may be attracted to buy stocks or sell stocks, but probably not derivatives, such as options. Normally, derivatives are more for the professionals. So if you were to have a large open interest in the world of options, it would even confirm even more what I said before about volume and price. It would probably confirm that you have institutional interest. It doesn't mean it has to be like that, okay? And to be honest, this is one, if I was to get flexible on any of those parameters, okay, one alternative to this filter, okay, one alternative to this filter, and I'm just gonna put it here, real time, so you see how it's done. I'm just gonna uncheck volume and open interest, okay? So one alternative, instead of looking at volume for the stock and open interest for the option, so one alternative would be to look at the volume as an average for 3 months, okay? But instead of making it 500,000 shares, so I'm just gonna make it, sorry for that, I'm just gonna make it 1 million shares, okay? 1 million shares, and if I do that, let me zoom in. So if I do that, okay, without the options, okay, so I uncheck those two on the top, okay, so there is no options data now in the scanner, okay, no options data now in the scanner, but now I've just been a little pickier with the total amount of volume, okay, which is now double. Instead of 500,000, now I selected 1 million shares. And if you were to do that, you will end up a bit less picky, okay. If I run this scanner, okay, I'm just gonna run it, okay, so we get the result. So if I run this scanner, you will see when the scanner is finished, we will have a greater quantity of stocks, I would expect, okay, and I mean, I cannot read the future, but I would expect a greater quantity of stocks in the list because now I'm not using options as a filtering tool. So again, this basically, I'm giving this option to you because some of you may be very picky, very selective as a trader, and therefore you only want to execute and identify opportunities, which are very, very few each week. But others may be more in the active side, and some of you may be thinking, hey, wait a minute, I want to be really, really active. So please give me more stocks. Okay, so in that way, by ignoring options data, but adding a greater quantity of volume, then you would basically end up finding more opportunities in the market that would be less ideal, but let's call it still ideal enough, okay? So anyway, since the long scanner is running and it's gonna take a while, I'm gonna move into the short scanner so I can go back to the parameters, okay? So I continue the conversation we had, and then I'll go back to see the results, okay? Okay, so what do we have? Again, $15, 500,000 shares, 100,000 open interest for the options. If you choose to use options, I just give you an opportunity to ignore those two and just create a volume filter with 1 million. Okay, we talked about that. But what else we have here? Okay. Oh, by the way, I forgot to uncheck implied volatility. This also has to do with options data. Okay, so I forgot to uncheck that. Let me cancel the prior. Sorry for that, guys. Let me cancel the prior scanner. Okay, so we don't waste time. And what I'm going to do is uncheck implied volatility and implied volatility because all of this is options data. Okay, so let me rerun it. Okay, now it's going to be shorter, by the way. It's going to take less time. Okay, a bit silly of me to not have realized that earlier, but anyway, it's okay. Now I repeated it twice, so hopefully it serves for you to not to forget and not to make the mistake I made. But basically, you have the volume, the open interest, and also the implied volatility. This really has nothing to do with stock trading, and this for today's session needs to be unchecked 100%. Now, what else do we have? Well, I have a condition for the price of the stock to be above an average, okay? And I will explain that on the chart, okay? It's a moving average exponential, an EMA. And also I have a condition based on DMI, okay? Where we want the positive DMI to be lesser or greater than the negative DMI, depending if you want to go long or short. And in a future session, I will explain why is that, okay? I just want to let you know that if you are a trader who uses TradeStation and you wanted to get a copy of this scanner, it's very simple. You can just, you saw my email before, isn't it? You can just email me at jose@fxstreet.com, and I'm more than happy to send you the scanner so you can import it into TradeStation, and that's it, okay? So the moving average, the EMA, Melanie, is a 9 EMA, okay? So if I get into the parameters, okay? If I get into the parameters, okay, let me do this. If I look at the settings, here we go. Now you have more visibility, okay? So you can see how the EMA is a 9 EMA, okay? 9 EMA. Again, we will run sessions where I explain why is the 9, why is not any other value, etc., etc. So you get it, okay? So I am just going to uncheck implied volatility values, okay? And I'm gonna rerun the scan here, and I believe that the prior scan is close to be completed. So I'm just gonna wait. It should not take longer, because once it's completed, we'll have a longer list, and then I'll be able to continue my process to at least come up, that would be my intention, come up with one stock trade, okay? I would like to today plan one stock trade for you guys, so you get to see the process. Again, in our first session today, it's going to be a bit incomplete when it comes to all the discussion I will be doing, because of course we need more time, so you understand every angle of what I do. But at least if you get to big picture, understand what I'm doing, then in the future sessions, now I can get deeper into the details while you understand the framework of what I'm doing. And therefore, that's my intention today, to get you to understand my framework, okay? Cool. So 93%, we are almost there. Okay, almost there, 94%. So there is a lot of data being calculated now. You got, after all the filtering, we got 2,461 stocks total. So there is plenty of data to be being downloaded and calculated on my machine as we speak, because TradeStation runs the scanners on the client side, okay? Yeah, the email, absolutely. It's going to be, the email is, so the email is jose@fxstreet.com. Okay, that's the email. So you can shoot an email to me, Melanie, and I'll be very, very happy to send you that file. Okay. So now, what did we get? Okay. Well, when I run the scanner the way I just said, notice that now I have got so many opportunities, 99 stocks. This, my friends, it's actually too much. Okay. This is actually too much, because now you will need to go one stock at a time. Okay. So that's why earlier I got more. I was less generous with the way I set up my scanner in order to filter. When I talked about you can be more picky, less picky, more selective, less selective. Earlier I was less generous. Okay, so why? So I end up with a shorter list. So I got higher quality stocks, and it required less time in my planning. Okay, so that line could be removed, and now if you select volume and open interest, but you take the implied volatility away from the picture, so now you should end up with a much shorter list, the way I did earlier with the shorting opportunity, which is being calculated as we speak. Okay, but anyway, since we got limited time, I will not rerun the scan. Okay, I will not rerun the scan. The only thing I'm going to do now is to sort from top to bottom the price of those stocks, and I'm just going to pick a stock, just because it's the first time that we're doing this together. So I'm just going to pick a stock, probably a stock that is known by many people, and just one of those popular stocks. Okay, let me see what we've got. Let me see. CLW could be, work could be. Let me see. What else do we have? because I just want to pick one since today we have time for one. So I'm just looking for a stock that is normally pretty known. I think I'm gonna go for Gilead Science, okay? And we'll take a look at that one. So I am loading the stock here. So I just clicked on it. So the stock is being loaded. Okay, so we'll have it on my screen in a minute. Okay, so here's the stock. A massive move today on the stock. I saw that stock on the news earlier, 6% up. Okay, so that's one of the reasons why it's showing up on the scanner. So yeah, but I would say probably that stock has moved already too much today to execute a trade. So let me see what else we have. Netflix. Okay, so maybe Netflix could be a good candidate for us to plan a trade on. Okay, very good. So we get Netflix there. Okay, so guys, I'm just fast forwarding my trading process and my brain while I'm looking at the chart. And if you don't mind, I'm just gonna move to a different one. I'm just gonna move into TLT, which is an ETF, okay? Just because I'm looking for an example, easy to understand, okay? And since today is our first day. So take a look at TLT, okay? This is remember earlier when I told you the first step of any methodology really should be to identify if it's time to trade or not. Okay, and this is kind of what I'm trying to explain today. So then we can dive deeper into it. Okay, so when it comes to TLT, okay, so if I was to look at my climate here, and when I say looking at the climate in the daily time frame, okay, TLT daily time frame, as you can see, so I'm looking at the last dot on the chart. Okay, even though you have a lot of stuff here on the left, ignore everything. Okay, because it's certainly all relevant. Okay, because it truly happened. But the beauty is that with this piece of technology, with this TradeStation study, we call it an app. Okay, so you got those three figures. Okay, you got those three figures. Okay, and those three figures basically are taking care of everything that is on the left. So you don't need to look at what's on the left. You only need to look at what is the last dot on the chart. Okay. By the way, I didn't say it. AutoClimate is a tool available on the TradeStation App Store. Okay. So on the TradeStation App Store, okay, TradeStation has something called the TradeStation Trading App Store, okay, which for you to access the App Store, you would type TradeStation. Actually, it should be HTTPS. Okay, of course, you need to have an account with TradeStation, okay? If you don't have an account with TradeStation, I'll show you how to get it on TradingView as well. So you will go for TradeStation trading app store.com. Okay, so that will be the URL. I'll just give you 1 second for you to take a screenshot. Okay, and once you go there, okay, so that implies the use of a browser. Okay, so let me go for a browser very quick. So if you were to go there, so TradeStation tradingappstore.com. So when you get there, you can just type AutoClimate. On the search box, and the moment you do that, here's AutoClimate. You can see it's free, so you just click install, and this tool will automatically install for you. Okay. If you don't have TradeStation and you want to have this tool running on TradingView, notice I have AutoClimate here on TradingView. Okay, same AutoClimate. So then the process is a bit different. You will need to use a different URL. Okay, and actually the process here will be 2 steps. So let me explain. So you would use a different URL, which is www.tradewithufos.com/join. Okay, and when you go there, okay, there is an activation fee, but you can get it free if you use a coupon code. Okay, coupon code which is Claymate. Okay, it's called Climate, so the coupon code is Claymate. Okay, keep that in mind. Okay, so Claymate. So very simple. So tradewithufos.com/join. Okay, and then you will see it here in the middle, apps. Okay, so here is your AutoClimate. Okay, here's your AutoClimate. You click here, and then in order to activate, you go ahead and use the coupon claim it, and you get it for free. Okay, perfect. So now, so you have the tool. Okay, no matter if you use TradeStation or not, you have the tool. So now, let's get to understand how to use this tool. Okay, because this tool will tell you if it's time to trade or not, and we'll come up with a trade here. So first, the last dot on the chart, that's what we focus on. What color is that? Blue. So what does that mean? It means that this is a market for you to be a buyer, not for you to be a seller. Okay? That's what it means. But it doesn't mean it's time to trade. Okay, we haven't confirmed that yet. So how do I confirm if it's time to trade or not? This is where those figures come into play. Okay? Those figures come into play now. So what are we gonna do? Well, first I need to explain what they are and what they mean. So the one on the left, okay, the one figure on the left is giving you information related to up market, while the one in the middle is giving you information related to down market. Okay, so this is for up markets, this is for down markets, and the one on the right, okay, it's giving you information related to the current climate, so the current situation in the market now. Now, what did we know about the current information in the market now? What we know, okay, what we know about the current information in the market now, okay, what we know is that the climate gave us a blue dot, so it's an up market. So because it's an up market, I would then not care about this figure because that one refers to down market, so forget about it. And then I would basically look at what statistics suggest, which statistics based on past data. And the beauty of statistics, by the way, is that they're useful. And also the beauty of statistics, okay, also imply that now your understanding of whatever you have in front of you is objective. So you are not overlying an opinion on top of what it is. Okay, you are not overlaying an impression on top of what it is. It's just statistics. So it's black or white. There is no need for interpretation. It's what it is. Okay, so that way, very easily, you remove human emotions or human distortions. Okay, so what do we have? Statistics suggest that for up markets, as we speak, in this time frame for that stock, the up climates are likely going to last 7 candles as a normal thing. 6.9, I'm calling it 7. So 7 candles is what we should see in an up market for this market. Now, this is a normal thing. You know, climates sometimes will extend way past 7 candles. Okay, but also sometimes there will be 2 candles only. Okay, so in other words, what is normal, what is likely, is to expect a duration of 7 candles in that direction. More than 7 now falls into the territory of less likely to continue, more likely to change or vary. Okay, so basically, if the current climate, right? So if the current climate is less than 7, so then trading long, it's a sensible thing to do because you are trading in a climate prior to this climate reaching its end based on statistics. If the current climate has surpassed 7, okay, so now you are a little bit in the hopeful side in the sense that the climate already stretched past what statistics would suggest. We know something high could go higher. We know there is a saying in Wall Street that suggests that a market could remain irrational longer than you could remain solvent. So yeah, sometimes statistics are totally broken. We know that, but expecting this every time you trade is hopeful. Is that making sense? So the idea is to have this understanding from a statistical point of view before we trade, so we know if it's time to trade or it's too late. And in this case, you can see that 11 is indeed greater than 7. The current market condition is already lasting greater what statistics, or longer, than what statistics would suggest it should be. In other words, if you were to enter long now, you are really expecting a little bit too much from that particular stock. Could it continue? Yes. Is it likely? Well, not that much. So what should you do? Well, the right action here is don't trade this stock. Okay? go find another stock with a healthier climate. That making sense? So that's what I'm doing on my first step here. And again, this really takes no time. Okay, so if I was to pick another stock from the list, okay, so let me see. Maybe I'm gonna use let me see. I'm just looking at some stock that is. I mean, we don't need the most popular stock in the market. By the way, majority of those stocks are really not popular, but in this particular case, but you know, CW, for example. Okay, we'll go for CW. So what's happening to CW? Okay, well, notice that even though the scanner identifies certain parameters that suggest to go long, based on today's price action, okay, look at what just happened on the climate. Okay, so we went from a situation where the scanner was expecting this to go higher, but right now, real time, we are being told, you know, not clear at all. Okay, notice that I didn't talk about this, by the way. Notice that some of those dots are thin, some of those dots are thick. Okay, we're looking for thick. Okay, thin means it's not defined. It's not defined. So, you know, look at how long it took for me to discard the trade. Okay, and by the way, this is what we should do as traders. More often than not, we should be discarding trades. Okay, so that way we become selective and picky. And then when we trade, really, we have a greater quality in our hands. Okay, so let's take a look at work, for example. Okay, so what's going on with work? Okay, so take a look at work. Okay, perfect. Okay, this is exactly what I was looking for. Okay, take a look at work. What's going on with the last dot? It's thick and blue. So it's telling you it's a proper market condition, which is confirmed, and it's a non-market. That's what this is telling you. But now, most importantly, let's look at the stats. And what are the stats telling you? Well, because it's an up market, I'm going to ignore the stats in the middle. Remember, the stats in the middle refer to down markets. So I'm going to focus on the stats on the left. And the stats on the left are telling you it's an up market. And this up market, it's likely going to last by 4 candles. So every time it's an up market, it's 4 candles. Okay. So every time it's going up, like 4 candles, 4 candles, like 4 candles, you know, something like that. Okay. 4 candles, sometimes a little more, sometimes a little less. But statistics suggest this is going to be the direction of markets. Okay. So now you know this is how long statistics suggest this market is going to continue moving in that direction. And for how long this market has been moving in that direction? Well, take a look. It just started. Just 1 candle. In other words, you are picking up a climate that just started to move in that direction. Okay? In that direction. So what would you want to do now? Well, unfortunately, we are reaching the end of the hour, so I will not be able to complete this trade. But just to be visual, okay? Here you got your zones, right? Whatever methodology you're using in trading, right? Here are your zones, okay? Your trading zones, okay? So let's say you pick this one, okay? Strong move away, blah, 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 right? So you may be attracted, and by the way, darker color, we'll talk about this more in detail, but that means higher probability. So what would you do? Okay, you would want to plan a trade to be a buyer here. So what will you need to do now? You will need to wait for this market to come down. And the moment it comes down to this price, you would want to be a buyer at this price. Okay, and you could call this your long entry. Okay, and below this trading zone, probably you will protect yourself by setting a stop loss. Okay, and then, you know, if this market goes up according to plan, well, guess what's going to happen when it reaches the red zone? Okay, guess what's going to happen? I mean, look what just happened here, going down, right? When it kissed that zone, what happened? It collapsed, okay, because of the unfilled order. So what would you expect to happen? You would expect it to collapse again. So what would you want to do? Probably you would set your take profit target at this particular point, and you would have an entry, a stop, and a target, and you would be able to execute this trade where you know how much you're going to lose if you're wrong, you know how much you're going to profit if you're right. Again, more for us to discuss in following sessions when it comes to many more aspects of this trade, because obviously there is more to discuss. Okay, but anyway, let's have a few minutes. We started 5 minutes late, so we'll do 5 minutes of Q&A, everybody. So first question for you, I'll have the first question. How did it go? Please give me some feedback on how is it going on your end. And then every other question is your question. You guys, please go ahead and type your questions. I'll give you answers. And when we are done, we will conclude today's session. So Melanie, do you set and forget this type of trade? An alert before that UFO area to verify the climate is still the same. Very good idea. And by the way, my favorite way on how to do that is use TradingView. Why? If I load here, for example, work, okay, so that was the stock, isn't it? So work. So here you go, work on the chart on the left. So what price did we just said? We said it's going to be 22.98. Okay, so let's call it 23. So what would I do? I will move my mouse here to, let's say, 23 point something, and I will right click to add an alert. So why would I do this on TradingView instead of doing this on TradeStation? Because TradingView keeps the alerts on the server side. Okay? TradeStation keeps the alerts on the server side, where TradeStation keeps the alerts in TradeStation. In other words, if you turn off your computer, then you have no alerts. Where with TradingView, even if you turn off your computer, you still get alerts. So it's pretty convenient and very easy to set. And plus, you also have a mobile app, which is called TradingView 2 for iPhone, for Android, etc. And you can just set this up very easily and have a push message on your phone, etc., etc. So again, I'm talking about convenience. Okay. So good suggestion, Melanie. I love your thinking. Melanie, it's going well. I've also been part of the session before. Of course, Melanie, I remember you very well, and I'm very, very happy you are joining us, and very, very happy to see other familiar names, isn't it? Chris, Danny, and many more. And I'm sure many of you will be watching this recorded. I mean, I had the privilege to work with you in the past, and I'm very, very happy to get to see you again. Okay, and make sure that you spread the word when it comes to the intensive plan that we have here in FX Street. To serve ODS students that may unfortunately end up losing their support, and we are getting organized here to support everybody. Okay, so very glad to see you, Melanie, and everyone else. Let me see what else. Happy to hear, John, that you're having a good time. Very nice. Very nice, everybody. Okay, everybody. So I think that we are just going to conclude the session now. Again, this is our first stock session. So very simple today, very simple, but bear with me, work with me, please. Send emails if you have suggestions, okay? We'll be listening to you, and keep in mind that our intention is to take this to the next level and the next. We're going to keep it simple so everybody will follow. But believe me, we're going to get advanced, but also not only advanced, we're going to be using technology to make our life simple. So, the plan is to really kill it, okay? Do a very, very powerful job here all together, okay? Very nice. Cool. So we are concluded. One last thing that I haven't said, just to prepare for the following session, because really today I talked about auto climate, okay? I didn't talk about the auto UFOs, which is the tool I am using on the right. You can see the name here, okay? I didn't talk about it, so I'll talk about this properly the other day. But I just want you to know that this tool, if you were to search for it on the App Store on TradeStation, so auto UFOs, okay, you would see this tool. That one is not free; it has a subscription. If you were to look at in our website and you want to use auto UFOs for TradingView, it also has a subscription fee. Okay, so again, what I want to say here is that we are doing an effort together with FX Street to help OTA students all the way. And therefore, during 90 days, just like you have access to FX Street during 90 days for free, you will also have access to the technology pieces that we utilize. So if you want to utilize those tools for free, so what you should do is come to, for example, TradeStation, then get the trial, okay? Then get the trial. And once you get the trial, then you email us, you email me, okay? So Jose@fxstreet.com, And then I will be working with TradeStation to extend the trial. The trial is 8 days by default, so we'll extend it to 90 days. So you guys can work with us here effortlessly and take it to the next level, okay? Again, right now I'm asking you to send an email, etc. So we're just getting better here with all our processes. Right now, some of the things we do are a little manual. If that is the case, please bear with us, because we're gonna get much more organized as the time passes. And you know, again, we'll make your life easy, okay? So bear with us if anything we do is just a bit, you know, manual, okay? Very nice, everybody. You guys take care, everybody. Again, super happy to be here. Glad to be here and help you. See you next time, which is gonna be tomorrow, okay? Actually, we'll see you every day this week, okay? We have 19 sessions. So all asset classes, okay? And by the way, if you're not a student and you are only enrolled in the Forex class, or only enrolled in a futures program or some asset class, within FX Street, you'll get access to all the asset classes, okay, with no restrictions. So take advantage of these guys, because all assets are correlated. All assets move in tandem. We may be trading stocks, but guess what? The stock market depends on the US dollar, and the US dollar is a currency, which is Forex. And by the way, the US dollar depends on gold, which is a commodity, which is futures. So it's all related. And, you know, we're going to get you very, very advanced, no matter if in your past you have been exposed to one asset class, two asset classes. We're going to expose you to trading properly all assets all the way. So we'll have fun. See you next time. See you tomorrow. Bye-bye, everybody. Take care.